Bitcoin macro, institutional accumulation, geopolitical implications, and the road to hyperbitcoin. Bitcoin in the transformative era. The Bitcoin story has evolved beyond speculative retail trading to encompass profound changes in institutional investment, corporate treasury strategies, and sovereign adoption. While mainstream coverage often focuses on price volatility and periodic scandals, the real story lies in the tectonic shifts that underpin Bitcoin's integration into global finance. This article takes an in-depth look at the trends shaping Bitcoin's trajectory, highlighting the implications for investors, institutions, and nations. Bitcoin's recent trajectory has been heavily influenced by institutions, yet media attention has been disproportionately focused on high-profile actors like BlackRock or MicroStrategy. However, the reality is much broader. Hundreds of institutions, from multinational corporations to private investment firms, are buying Bitcoin through OTC exchanges, custody services, and direct participation in the market. One notable example is Tether, the issuer of the world's most popular stablecoin, which recently added 7,629 BTC, about $700 million, to its reserves. The purchase brings Tether's total holdings to 82,983 BTC, underscoring its commitment to using Bitcoin as a long-term strategic reserve asset. The development is in line with Tether's 2022 announcement to allocate 15% of its quarterly profits to Bitcoin, a move that reflects the company's confidence in Bitcoin's asymmetric risk-reward profile. Exchange outflows and supply squeeze. The narrative of Bitcoin scarcity is becoming clearer. Data from major exchanges like Coinbase shows consistent outflows, with wallets, both hot and cold, recording significant drops in Bitcoin balances. These withdrawals often represent institutional buyers moving assets into cold storage, further tightening the supply available to retail investors. This ongoing supply squeeze sets the stage for heightened price sensitivity. As liquidity dries up, even small spikes in demand can amplify price volatility, benefiting long-term holders who understand Bitcoin's deflationary dynamics. A key challenge in analyzing institutional Bitcoin accumulation lies in its lack of transparency. While ETFs like BlackRock provide transparency through regulatory filings, many institutions leverage private custody solutions that obscure the true extent of their holdings. As a result, the scale of institutional participation may be underestimated, creating a hidden layer of demand that only becomes apparent as Bitcoin's price continues to rise. Corporate and sovereign adoption. A strategic shift to Bitcoin. Tether's accumulation illustrates how corporate entities are integrating Bitcoin into their financial ecosystems. With over 82,000 BTC in its reserves, Tether demonstrates how corporations view Bitcoin not just as a speculative asset, but also as a strategic hedge against fiat devaluation and systemic risk. These implications are not limited to Tether. Companies like MicroStrategy have pioneered corporate adoption of Bitcoin as a treasury reserve asset, with Michael Saylor advocating that Bitcoin outperforms traditional cash reserves in maintaining purchasing power over time. While corporate adoption has garnered significant attention, sovereign accumulation is perhaps the most consequential development. Recent reports confirm that Russia is leveraging Bitcoin for international trade to bypass Western sanctions. This revelation is consistent with previous rumors from 2018 to 2019, which suggested that Russia and other countries were accumulating Bitcoin as part of their strategic economic policies. The Russian government has legalized Bitcoin mining and is using domestically mined BTC for cross-border transactions. According to Finance Minister Anton Siluanov, these transactions are already underway, with plans to expand the scope in the coming years. Such moves highlight Bitcoin's emerging role as a neutral, censorship-resistant monetary system in an increasingly fragmented geopolitical landscape. Russia is not alone. Countries like Iran and others under financial sanctions have also adopted Bitcoin for trade and economic activity. This trend underscores Bitcoin's utility as a tool for financial sovereignty, challenging the dominance of the US dollar in global trade. The gradual adoption of Bitcoin by sovereign entities could have profound implications for its valuation and status as a global reserve currency. The scarcity factor. Why Bitcoin's supply dynamics matter. Limited supply with growing demand. Bitcoin's fixed supply of 21 million coins is central to its value proposition. However, Bitcoin's current distribution paints a bleak picture. Research suggests that around 90% of the Bitcoin supply is held by long-term holders, whales, and institutions, leaving a dwindling portion for retail investors. The continued accumulation of funds by entities like Tether, coupled with sovereign adoption, exacerbates the supply shortage. This scarcity dynamic isn't just a theoretical concern. It's a key driver of Bitcoin's long-term price trajectory. Reports from organizations like Fidelity suggest that Bitcoin could hit $1 billion per coin by 2038, driven by limited supply and growing adoption. While such predictions may seem speculative, they highlight Bitcoin's transformative potential as a deflationary asset in an inflationary world. Even conservative estimates put Bitcoin's future valuation in the hundreds of thousands, underscoring its appeal as a long-term investment. Hyperbitcoinization, the inevitable shift to a Bitcoin-centric economy. Hyperbitcoinization refers to the tipping point where Bitcoin becomes the dominant global monetary standard. This scenario is not just theoretical. It is increasingly likely as institutions, corporations, and nation-states integrate Bitcoin into their financial frameworks. The indicators of hyperbitcoinization are becoming clearer. Sovereign accumulation, institutional adoption, and the declining availability of Bitcoin on exchanges all point to a future where Bitcoin powers global trade and investment. In addition, the growing ecosystem of Bitcoin-based financial services, from ETFs to lending platforms, further solidifies its role in the financial system. A lesson for investors: navigating the road ahead. Despite these transformative developments, retail investor participation in Bitcoin remains modest. Many retail investors are deterred by short-term volatility, failing to realize the long-term potential of even modest Bitcoin holdings. For example, owning just 0.28 BTC could put an individual in the richest group of Bitcoin holders in the future. Strategic accumulation and education. The key to successful Bitcoin investing lies in education and strategic accumulation. Retail investors must shift their focus from speculative trading to consistent, long-term investment strategies. Understanding Bitcoin's role as a hedge against inflation and a tool for financial sovereignty is crucial to making informed decisions. Avoiding common pitfalls. A common mistake made by retail investors is to give in to fear during a market downturn. Panic selling often results in a transfer of assets to more knowledgeable participants. By maintaining a long-term perspective and leveraging dollar-cost averaging, investors can mitigate the emotional impact of volatility and position themselves for significant gains. Embrace the Bitcoin revolution. Bitcoin's evolution from a niche digital asset to a cornerstone of global finance is reshaping the economic landscape. The convergence of institutional accumulation, government adoption, and diminishing supply makes a compelling case for Bitcoin as the ultimate store of value in the 21st century. For investors, the opportunity is clear. Act now or risk being left behind. The window of opportunity to accumulate Bitcoin at an accessible price is rapidly closing, but those who recognize its transformative potential will benefit greatly in the years to come. This edition maintains a professional tone, highlighting key insights for a knowledgeable audience and integrating technical analysis with actionable advice. Bitcoin's transformation journey reflects its evolution from a speculative asset to a cornerstone of global finance. With its fixed supply, decentralized infrastructure, and growing adoption, Bitcoin offers an unprecedented opportunity for individuals, institutions, and nations to protect their wealth in uncertain economic times. However, the path forward requires not only strategic accumulation, but also an understanding of the broader implications of Bitcoin's growing role in the financial system. As institutional investors, corporations, and sovereign entities continue to buy Bitcoin, market dynamics are irrevocably shifting. The dwindling supply on exchanges, coupled with the growing adoption of Bitcoin for trading and storage, underscores the urgency for retail investors to act decisively. Owning even a fraction of Bitcoin could yield extraordinary future returns as scarcity increases and valuations rise. For retail participants, the key is education, patience, and commitment to long-term investment strategies. By recognizing Bitcoin's potential and aligning with its trajectory, they can position themselves for financial resilience and growth in an increasingly Bitcoin-centric economy. The future is unfolding now. Those who are prepared will benefit the most.